Hello and welcome to Pricing College with your hosts Aidan Campbell
and Joanna Wells.
In today's episode, we want to talk about that probably more common than we'd like to admit scenario where a procurement team says, show me your costs. I want to see your costs so we know that you're not charging too much.
So what do? Do you show them the costs, or do you in some way fluff around the topic and try and avoid that for a couple of weeks? Maybe get your salespeople to meet with them a bit more to discuss the features and benefits of the offer. And then pretty much after a few weeks like that, come back to just showing them the costs. Is that right? Is there a better way to do it?
You know, I think, let's be honest up front, showing anybody your cost is a truly terrible idea. We can't overstate how bad an idea it really is. And why would a procurement team ask you to do that? There really only is one reason: is to drive down your prices. It's a method to hammer you down, to get you to accept a lower price. You know, if they're looking at your cost, they're probably already interested in buying your product or service, and so, you know, you're not really going to come out of this in a better position than you go in. But it's how do you deal with it? I suppose on our podcast we've covered many times how cost plus pricing, all the negatives, I think we're all aware. But I think if a customer's saying, show me your costs, you know, what you're doing is you're almost instilling that concept of focus on costs into your business. You're almost rationalising it. It's like talking to a crazy person and you're almost trying to rationalise what the crazy person's doing. So by default, you will in your business see more focus on costs. You will start to try and rationalise and become a cost plus business. And in reality, it's everything you don't want to be.
Yeah, and I think, you know, if you're coming from a business, and even if your mindset is based on costs, and then a customer procurement team comes and talks to you about cost, should you be surprised? Should you be taken back when you yourself are doing that and pricing based on that? I mean, it seems illogical to ask that question, but strangely, people are often surprised that they are asked this type of cost-based question from procurement when they indeed are giving them cost plus pricing. So it's only natural that they kind of would ask that, and sort of irrational to assume they wouldn't. So really, what are you actually saying is that you don't trust your own prices. So procurement, in a way, are right to question the calculations upon which you've drawn and based your pricing, because there's something deeply flawed with that. And really, in my opinion, when I've looked at a lot of clients' work, they are coming from a cost plus culture. And a cost plus culture, what is that? Deep down, you strip all the fancy accounting away from it. Really, it's a very insular, inward-looking approach that really just focuses on your own operations. It doesn't really take into account a lot of the moving parts and factors occurring around in life and in business. It doesn't really even take into account the fluctuations in costs, in commodity costs and pricing, in increases in freight, changes in freight, operations, or even inflation. And so what happens is that you get this very broad calculation across your portfolio, and one assumes that is going to be a good proxy for costs. But deep down, everybody knows that it isn't. So so then the basis upon which you've calculated costs could be problematic. And then on top of that, you've slapped on a percentage markup. And then all of a sudden you have procurement asking, how much is that markup? And really, you don't want to tell them that, because really deep down, you're not very sure that your cost position was correct.
Yeah, I think it really brings into the light the insanity of cost plus pricing, because what margin are you adding? Are you adding 10%? When someone really is grilling you on why 10%, why not 5%, why not 7%, realistically, you don't have a good answer. I've had an experience of doing this. We were an industrial business selling to a major retailer. And as in many retail businesses, they make, some of them make quite low margins. On $1 billion, you might only be making 1% to 2% to 3% margin. But that might be a very effective or very efficient, margin in a company like that. But, I remember someone in the operations team in our company saying, "Oh, just explain to them that we're only making 15% margin." Almost expecting that they would be they'd be happy and let you do that. Clearly, the argument would be, well, we're only making 3%. Why should you be making 15%? And it's simply a method to push you down. I don't think I've ever heard of an example where somebody has looked at the costs and come back and said, "Oh, here, wait a minute, you're not making enough. You should add a bit more margin on top." So it's a sort of like it's a false question. It's purely a gambit to push down your costs. So that the selling price reduces. Generally, they couldn't care less about your long-term sustainability. Procurement always claims that, but unless they're purchasing the vast majority of your product, if they're less than a certain percentage, it's not really going to jeopardize most bigger companies, and so they're in the game of pushing you down. I have one more topic to add about this. I'll pass to Joanna now, but I think if somebody asks you a stupid question, I'm a big believer in giving quite stupid answers.
Yeah, well, I think what you're trying to get at is there's a big element of bluffing going on both sides. So what do you do in the short term? These questions, this is a difficult question that's often asked by procurement. And right, your pricing isn't great. So what are you going to do about it? Well, I'm not going to give you the easy answer first. I think, you've got to really work on your pricing capability, build in a better system, architecture to give you confidence that you actually do know the right market price. And then after that, once you know the market price, then you've got to start understanding the value of your products and the economic value that your business provides to your customer. So that's the expert answer. But okay, dealing with the short-term tactical answer, what do you do when somebody asks you that? Well, I've seen even the most pricing experts being given this question, and you have to almost reframing based on what you believe you can deliver. But ultimately, what I have seen people do is just build out their costings and literally inflate their costings. Am I saying that absolutely is not best practice at all? And it's a very, it's a reputation damaging move. So I do not advise that businesses do that. I think what you need to do is, call procurement on this bluff. Get back, have a real conversation, start asking better questions, start thinking about segmentation. Are these the right customers for your business? And then start building sponsorship in your business to build a better pricing capability that safeguards you and the business from this type of risk, because it isn't just short-term risk. As you can see from this very difficult question, it exposes the business model, the pricing capability, the whole lot. So, yes, you can fluff around the edges, and that's what most people do. And then they give a long-winded accounting explanation for all their costs and why to justify their prices. But that doesn't in any way have any bearings on the value that they're actually offering their customers, and the value that the customers actually want from your business. So I disagree, Aidan. I think even procurement would agree that they're not looking for just a cost down, price decreases. They're actually looking for value, but they ask the question about costs because they know that the sellers can't give them a clear answer. So that's what I actually truly believe. And if they didn't believe that, the customers provided them value, then why are they doing business with them? So it's your job as a seller to actually investigate that answer and then provide a clear, short answer to procurement, and that will completely eliminate such ludicrous questions like that.
I'll take that on board, but I think I'm actually going to disagree on this one. I think, obviously, as Joanna was saying, if you don't invest in value-based pricing, if you don't invest in your corporate value, you inevitably will increase the chance of this preposterous discussion happening. So you don't plan. It's like, I suppose it's like an army. You plan for years in advance and strategize and all these things that in the situation where bad things happen, you're prepared. By investing in your value management, in your sales team, in all that articulation, you prevent this stuff from happening. But like the idea, do you think Apple, if someone goes in to buy a telephone from Apple or a smartphone, that they can come and ask to see the cost base of Apple? It is preposterous because companies like that understand their value and sell on those bases. But let's look at the scenario where, and as in many companies, certainly in B2B, when this question's coming up, it sort of insinuates that they haven't invested in value. They haven't done any of this work. They've done no work at all, and they've just bumbled along, and now they're sitting in a position where they want to get a big tender through, and they've got a thing on their table saying, we want to see your cost base. Like, my view with this is, it's a preposterous question. Accounting is a very fluffy area, and it's, when they're asking for cost base, generally they're trying to say, it shows your marginal cost. But the reality of it is just a portion cost to it if you have to. Management time, research and development time. One of the big issues with cost plus pricing is it's impossible to work out costs. We've discussed this ad nauseum on this podcast. It's, if you try to work out costs move. Is it variable cost? Is it total cost? Is it the cost of opportunity cost that you could have invested in other things? Is it return on? It's a fool's errand. And so in this scenario, I would just suggest just play the fool's errand in a different way and apportion every single cost you can do. I often think if that's what your corporate decision is, if your corporate decision is you want to do business on these terms with a supplier or a customer who doesn't value you or who pretends not to and involves in these value destructive activities, but you're prepared, that's how you want to operate, I think that's how you should do it. So I often think of the famous, I think it was Henry Ford and Tesla. It's probably not a real story, where in the factory, Henry Ford, I have no idea if Henry Ford and Tesla ever met, but the famous situation where there was a rattle in the wall, and Henry Ford said to Tesla, can you find the rattle? So Tesla walked down the corridor, worked out, tapped the wall 2 or 3 times and heard where the noise was coming from. He then stuck a nail into the wall and all the sound disappeared. And then Henry Ford said, well, how much will that cost? And he goes, $1,000, which was a lot back then. When Henry Ford said, how's it $1,000? It only took you 2 minutes. I think the famous answer from Tesla was it was $2 for the time, and the rest was for the knowledge of where to do it. So, that's cost. That's completely legitimate. And it is, if you walk yourself into a scenario where you're in a silly situation, that as a business you've caused yourself to a large extent, there's no real great escape from it. So you gotta, if you're going to play the game, you have to play by the rules.
Well, I don't think that was disagreeing with me. That seemed like to support exactly what I was saying. I absolutely agree. But there is that distinction between that tactical move, which often businesses make by, just almost being creative with their costings. But I would even say when I see that creativity, it's lacking. Or the more strategic thing is by actually understanding the value of your product portfolio. But more than that, the economic value that your business provides to each and every customer. At which point, then you can reframe and blow away any ludicrous questions regarding costings with that. Because now you're actually getting procurement to discuss the real topic at hand, which is the value at risk. Are they really, really willing to risk the value that you can offer them? And they know that you can give them and do give them. And when you know that it's important to them and that you deliver it very well consistently, well, if you know that, then any silly questions like that, it can almost be laughed off. And I think then you can move on and actually really do business.
Yeah, I think if someone comes and asks, how do I know if customers don't value me? How do I know if I don't have a real good value management system? let's be honest, if someone asks to see your costs, they're literally yelling in your face that they don't value, or they think they don't appreciate your value. So, that's a red light. It should be a warning sign. But, if you get to that position, I suppose you look at the if you really are a high value company, it's highly unlikely somebody would ask you that. Secondly, if you really understand your value, you just laugh it off and say no. And probably if someone keeps pushing on it, they're not a customer you want to deal with. So you got to play the ball from where it lies. You can't become a high value company, have great value management. It doesn't happen overnight. It's a long-term build. But, you work hard, and then one day you find that customers may not be asking you these questions, or at least you can say no. That's it for me today.
Yeah, it's a long-term build, and I suppose, the important part to think about here is, are you willing to invest in that long-term strategic capability whilst in the short term being more prepared to deal with those sort of difficult questions from customers? Because you can do both at the same time, but both require a mindset set change from within. It's a top-down led strategic initiative, but then it needs to be embedded within the teams. You can't expect just consultants to come in and give you the answer, because they'll just give you an answer to one or two questions, which tend to be actually quite tactical. The longer game is ensuring that your teams understand what they're doing, are building an architecture, and it's a sustainable capability that's internalized. It's driven by your team, not by an external. And, from there, there'll be that ever-growing confidence in that commercial pricing field, and you'll be able to not only understand the value that you offer, you'll be able to get the price that you deserve, you'll stop underselling yourself, and you'll be able to deal with quite these difficult procurement teams and conversations. But anyway, look, feel free to get in touch with me, my team. More than happy to discuss these type of issues. They're quite pressing at this time, and we completely understand and can give you a few pointers here and there. So anyway, thanks for listening. Appreciate your time. Okay, bye-bye.
I'm just going to add one last one, which is just almost like a vindictive thing. If you were forced to do this sort of stuff, you should probably add a different line item of cost, which is the cost for the accountants and the consultants' time that it took, the weeks it took to work out your cost base for this cost allocation. So you should probably highlight that and just make sure that pushes the price up. All right, that's just me. Thanks. Bye.